Hi, my name is Anurag. I am going to ask you a very simple question. Have you ever thought of investing in the US stock markets? I will share with you 10 simple reasons why more and more Indians are investing in the US and maybe why it is time for you to do also. First, you get to own the biggest companies on earth. 8 out of the top 10 companies on earth are situated in the United States of America, whether it is Apple or Microsoft or Nvidia or Google. Just two companies, Apple plus Microsoft, are bigger than the total market cap of the Indian stock market. That is the kind of scale you get when you invest in the US markets. Number two, it helps you to protect your money against rupee depreciation. 20 years ago in 2005, $1 was equal to 45 rupees. Today, $1 is equal to 86 rupees. That is a 90% depreciation in 20 years. If you keep investing only in rupees, you will lose global buying power. Investing in dollars helps you protect what your money can buy. Third, you get much better diversification than you can get only in India. Indian market is good, but it is very heavy on finance and IT. The US market gives you a wider mix. It gives you technology, healthcare, consumer goods, and much more. It is like upgrading from a good local thali to a gorgeous global buffet. Fourth, these companies earn from across the world. Coca-Cola sells to every country on earth. Netflix has 270 million users globally. And so does Nike. Nike earns bulk of its revenue from outside the United States. When you invest in them, you are tapping into global consumption, not just one economy. Fifth, the US market is highly regulated and transparent because they are built on transparency. The Securities Exchange Commission of the US, which is the financial regulator, is very strict on disclosures and audits. That is why the US markets make up over 40% of the global markets. This kind of trust brings in the money. Sixth, you are investing in innovation. The US spends over $700 billion every year on research and development, more than any other country. That is why over 50% of the world's unicorns, whether it is artificial intelligence or biotechs or electric vehicles, they are born there. You are not just investing in profits, you are investing in the future and reaping the benefits of returns of innovation. Number seven, the long-term returns have been far more strong in the US. Let us look at the data for the last 10 years. From 2015 to 2025, the Nasdaq 100 gave a yield of about 15% in USD terms. At the same time, if you add the rupee depreciation, this yield goes up to 18%. Now compare this to Nifty 50, which gives 12%, which is still good, but US gave 50% higher than what Nifty 50 gave, thanks to growth plus currency. Now, if we apply the rule of 72, it basically means that if you invested in the Nifty 50, your money would have doubled in 6 years. But if you invested in Nasdaq 100, your money would have doubled in only 4 years. That is significant. Number 8, in a crisis, everyone runs to the dollar. Dollar is effectively the world's reserve currency. During COVID, during 2008 crisis, every time global investors ran towards the US dollars. The US dollar is not just a currency. It is a financial safety net for everyone. Number 9, it is easier than you think. No, it is not complicated. If you cannot buy a full American share, don't worry. You can buy part of the shares. You can even buy part of one share. That fractional investing is allowed in the US, which is not allowed in India. ETFs like Standard & Poor let you invest in all the 500 top companies with just a single click. And last but not the least, number 10, it helps you plan for global goals. If your child wants to go and study in the US, the typical annual fees is rupees 30 lakhs to 50 lakhs depending upon different colleges. Now, if you save only in rupees, the rupee depreciation will cause your budget to overshoot by 30 to 50%. So hold some money in dollars, not just for your dreams, but for your child's dream also. In conclusion, I may say that this is not just about investing globally. It is about protecting your future, protecting your child's future, growing your wealth, and thinking bigger. So the real question is, once you now know these 10 benefits, why are you missing out from this opportunity? And when are you going to start?